Let us learn the accounting fundamentals by going to the different definitions given by the Accounting Standards Council in 1983 and other definitions as given by other bodies that are in charge in the development of the accounting discipline. The first definition given by the Accounting Standards Council in 1983 states that accounting is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions. So in this definition, it says that accounting is a service activity and its function is to provide quantitative information which are primarily financial in nature. Another definition given by the Financial Accounting Standards Board in 1978 states that accounting is an information system that measures, processes, and communicates financial information about an economic entity. So in this definition, the accounting is an information system. So in here, it mentions the system that it measures, processes, and communicates financial information. So financial information is common to the two definitions. According to the American Accounting Association in 1966, accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. So in here, you can see the process of identifying, measuring, and communicating economic information to the intended users. And perhaps this is one of the oldest definitions given to us by the American Institute of Certified Public Accountants in 1953. It states that accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transaction, and events which are in part at least of a financial character, and interpreting the results thereof. So in each definition, we have those common features regarding the accounting as a system, and its main function is to provide financial information regarding a business entity. So let us have an account of how the accountancy discipline in the Philippines progresses. In March 17, 1923, there is an Act number 3105, an act regulating the practice of public accounting, creating the Board of Accountancy or the BOA, providing for examination, for granting of certificates, and the registration of certified public accountants or the CPA. So this is as early as 1923. So from 43 registered CPAs in 1923, as of today, it is more or less 160,000 registered CPA in the Philippines. And we have here the biggest of local accounting firm, the SGV & Company. And among the big five of the accounting world, the Arthur Andersen, now defunct, PricewaterhouseCoopers, Ernst Young, KPMG, and Deloitte Touche International. And there was this Accountancy Act of 1967. So you see how the development of accountancy in the Philippines progresses as years go by. And the Revised Accountancy Act in 1975. And there is the Philippine Accountancy Act of 2004, also called RA number 9298, signed by President Gloria Macapagal Arroyo on May 3, 2004. So more or less, that is how the accountancy discipline developed in the Philippines. So we move to the Code of Ethics for Philippine CPAs. These are the fundamental principles. First is integrity. A professional accountant should be straightforward and honest in all professional and business relationships. Integrity also implies fair dealings and truthfulness. So, kailangan natin ang integrity not only in the profession of accountancy, but I think it is applicable to all profession. Integrity. Then we have objectivity. A professional accountant should not allow bias, conflict of interest, or undue influence of others to override professional or business judgment. Professional competence and due care. A professional accountant has a continuing duty to maintain professional knowledge and skill at the level required to ensure that the client or employer receives competent professional service based on current developments in practice, legislation, and techniques. So we have to be updated. Every professional has to be updated in the current trends in his profession to be able to adapt with a very fast changing environment. Confidentiality. A professional accountant should respect the confidentiality of information acquired as a result of professional and business relationships and should not disclose any such information to third parties without proper and specific authority unless there is a legal or professional right or duty to disclose. So this is one of the very important code of ethics for the Philippine CPA. Professional behavior. A professional accountant should comply with relevant laws and regulations and should avoid any action that discredits the profession. So these are the accounting standards in the Philippines. Accounting standards are authoritative statements of how particular types of transactions and other events should be reflected in the financial statement. So kahit anong discipline ay merong sinusunod na standards. And so the accounting discipline also has its own standard. The Accounting Standards Council or the ASC, created by the Philippine Institute of Certified Public Accountants, PICPA, on November 18, 1981, to establish and improve accounting standards that were generally accepted in the Philippines. And we have here the Financial Reporting Standards Council, or what we call the FRSC. It shall be the new accounting standard setting body, thus replacing the ASC. The FRSC, composed of 15 members, chaired by a senior accounting practitioner, and 14 members from BOA, SEC, BSP, BIR, COA, and other major organizations. And starting in 1996, the ESC issued accounting standards that were based on international accounting standards. So this is IAS. In 1997, the ESC made the decision to move totally to international accounting standards and eventually to international financial reporting standards. We have also the different branches of accounting. One is auditing. Auditing, once the accounts have been prepared, they may have to be checked in order to ensure that they do not present a distorted picture. So that is audit. Then bookkeeping. It's a mechanical task involved the collection of basic financial data. Financial accounting. The information supplied is usually for the benefit of the owners of an entity, but it can also be used by management for planning and control purposes. Financial management. Another branch of accounting. Financial managers set financial objectives, plan, obtain the financial needs to achieve the plan, and generally safeguarding all the financial resources of the entity. Then we have management accounting. An accounting system incorporates all types of financial and non-financial information from a wide range of sources. Taxation. Tax work are responsible for computing the amount of tax payable by both entities and individuals, and we have other branches that can be or that may be possible. So, what are the different types of business? These are the traditional and basic classification. The three types of businesses: the service, the trading and merchandising, manufacturing. So, business engaged in various types of selling, services, trading, yan yung tinatawag nating buy and sell, manufacturing. So, they have the raw materials, they apply labor and convert them into finished goods. So, yun yung traditional nating classification. But the traditional classification has now evolved to these different types of businesses. Different classification as time goes in different changes in technologies and other form of business dealing. So we have here also the services, selling people's time, example, software development, accounting, legal. Trader, buying and selling products. So example, the wholesaler and retailers. Then the manufacturer, designing products, aggregating components, and assembling finished products. Example, vehicle assembly, construction, engineering, electricity, food and drink, chemicals, media, pharmaceuticals, water. Then the raw materials regarding the growing or extracting raw materials, example, farming, mining, and oil. And we also have the infrastructure, selling the utilization of infrastructure. Example, I transport like airport operator, airlines, rings, ferries, bus, hotels, telecom, sport facilities, property management. Then financial, receiving deposits, lending and investing money, example, bank and investment house, and insurance, pooling premiums of money to meet claims of a few. We have also the forms of business organizations. The three forms of business organizations. We have the sole proprietorship. This business has a single owner and called the proprietor. The partnership is a business owned and operated by two or more persons. So, pareho pa din yung ating forms of business organizations who bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profits among themselves. Then we have the corporation. A corporation is a business owned by its stockholders. So, padami ng padami yung mga may-ari. It is an artificial being created by operation of law, having the rights of succession and the powers, attributes, and properties expressly authorized by law or incident to its existence. The stockholders are not personally liable for the corporation debts. We have the revised Corporation Code of the Philippines under Republic Act 11232, effective February 23, 2019. So it is very recent. Added a new type of corporation, the one-person corporation. So OPC is a corporation with a single stockholder. So yan yung kaiba sa ating revised Corporation Code. Who may be a natural person? Dati kasi natural person, but this time, it can be a trust or an estate. So those are some of the developments under the revised Corporation Code of the Philippines. The micro, small, and medium enterprises. Micro enterprises are those with assets before financing of 3 million. So, ang tawag dyan sa kanila ay micro. Small enterprises are those with assets before financing above 3 million. So, the benchmark is 3 million. Medium enterprises have assets before financing of above 15 million to 100 million and employ 100 to 199 workers. According to the National Statistics Office, MSMEs in 2010 accounted for 99.6% of the total businesses enterprises at 777,687 in number. And 99.6% is broken down as follows. Microenterprise, 91.6%, and SMEs for 8%. So, it is clear that the microenterprises dominates most of those businesses in the country. What are the activities in business organizations? There are 3 activities, group of activities. If we are going to group the different activities in every business organizations, these are the 3 major business activities. First is the financing activity. So, ano ba ang ginagawa sa financing activity? So, the organization require the financial resources to obtain and other resources in financial markets. Primary sources of financing for most businesses are owners and creditors. So, such as also included are banks and suppliers. So, in other words, ano ba itong financing activity? Ito yung pag-start ng business kung saan siya hahanap ng kanyang capital. Okay, so pwede daw itong pera lang ng may-ari, pwedeng mangutang, or pwedeng mangutang din sa bangko, sa mga creditor, kung ano yung paninda, or sa mga supplier naman. Another activity is investing activity. Investing activity involves the selection and management, including disposal and replacement of long-term resources that will be used to develop, produce, and sell goods and services. Investing activity include buying land, equipment, buildings, and other resources that are needed in the operation of the business, and selling these resources when they are no longer needed. So, investing, ito na yung pagbili ng mga gagamitin sa negosyo, bili ng lupa, kailangang equipment, anong building ang itatayo, and other resources na kailangan para mag-operate ang business. And kasama din sa activity na to, kapag ang mga equipment or buildings ay hindi na masyadong useful sa business or hindi kailangan, pwede na siyang i-dispose or pwede na siyang ibenta. Okay, so ganun ang activity sa investing activities. And the operating, of course, is ito na yung pinaka-heart ng activity ng business. Operating activities involve the use of resources to design, produce, distribute, and market goods and services. Operating activities include research and development, design and engineering, purchasing human resources, production, distribution, marketing, and selling and servicing. So, ito na yung pangkalahatang ginagawa para makapag-produce ng income ang isang organization. And this is all about operating activities, every activity embodied in this operation. We have the phases of accounting. In general, we have the 4 phase. First is the measuring phase. In order that accounting information will be useful, it must be expressed in terms of a common financial denominator. And that is money. Siyempre, ganun talaga, no? Pagka ang transaction hindi natin ma-express in terms of monetary value, so hindi natin siya ma-measure as far as accounting is concerned. Then the classifying phase. Classifying reduces the effects of numerous transactions into useful groups or categories. So this is the phase wherein we post our entries to ledgers, different ledger accounts. Okay, yung tinatawag nating T accounts. Because in this process, the classifying phase, we post similar transactions to a particular ledger. For example, all sales will go to a ledger, the ledger of sales, all expenses, and so on. Then, the summarizing phase. Summarization of financial data is achieved through the preparation of financial statements or the financial reports. So, these usually summarize the effects of all business transactions that occurred during some period. And then the interpretation phase. So, this is the result of summarization, and it has to be interpreted or analyzed and to evaluate the different aspect of the financial statement if you want to see the liquidity, profitability, and solvency of the business. Accounting provides the decision maker with this information to make reasoned choices among alternative uses of scarce resources in the conduct of business and economic activities. So those are the phases of accounting: the measuring phase, the classifying phase, the summarizing phase, and the interpretation phase. And who are the users and their information needs? The investors need information to help them determine whether they should buy, hold, or sell their investment in different stock markets. Employees are interested in information about the stability and profitability of their employers. So, pag nalulugi na ang kumpanya, huwag na kayong mag-apply. Hanap ng iba. Lenders are interested in information that enables them to determine whether their loans and related interest will be paid in due. So, that's the interest of the lenders. The suppliers and other trade creditors are interested in information that enables them to determine whether amounts owing to them will be paid in full. So, these are the suppliers and other trade creditors. And the customers are interested in information about the continuance of an enterprise, especially when they have a long-term involvement with or are dependent on the enterprise. For example, the soft drinks company are so much independent in the company that produce sugar, because that is one basic element or ingredient in their product. And the government and their agencies are interested in the allocation of resources and the activities of the enterprise. So, allocation of resources. And the public enterprises affect members of the public in a variety of ways. Financial statements may assist the public by providing information about the trends and recent developments in the prosperity of the enterprise and the range of its activities. So, they have different interests. And what are the fundamental concepts? So, these fundamental concepts ay pinaka-base or basihan ng accounting discipline. So, we have here the entity concept. So, an accounting entity is an organization or a section of an organization that stands apart from other organizations and individuals. So the word here is stands apart as a separate economic unit. So dapat daw ihiwalay natin ang entity from its owner or from another economic unit. Then, periodicity concept. An entity's economic life can be meaningfully subdivided into equal time periods for reporting purposes. This concept allows the users to obtain timely information to serve as a basis on making decisions about future activities. And for purposes of reporting to outsiders, 1 year is the usual accounting period. So, masyado daw matagal kung hihintayin natin ang walang hanggan. So, meaningfully, we can measure the performance of an entity under the periodicity concept. So, gawin natin ang report na by year, can have it by month, 3 months, or 6 months. Kung ano yung mas kailangan ng isang entity. But, in general, 1 year is the usual accounting period. So, 1 year, taon-taon, i-measure ang operation. In the stable monetary concept, the Philippine peso is a reasonable unit of measure and that its purchasing power is relatively stable. It allows accountants to add and subtract peso amounts as though each peso has the same purchasing power as any other peso at any time. This is the basis for ignoring the effects of inflation in the accounting record. So, stable monetary concept means hindi natin binabago-bago ang pagre-record dahil ina-assume natin na ang piso ay piso ngayon hanggang bukas ay piso pa rin in spite of the change in exchange rate every day. We do not assume that our recording of peso will also change. So that is the stable monetary concept. What are the criteria for general acceptance of an accounting principle? So, kahit na anong discipline, kapag gumagawa ng criteria, kung ano yung gagawing mga principle, ay kailangang pinag-aaralang mabuti kung ano yung katanggap-tanggap o ano yung pinaka-dapat na maging principle ng isang discipline so that it will be adaptable in the current times, in the current trend, and ibig sabihin lahat ng parties ay panalo. So, ito yung mga criteria sa pagpili ng principle, not only in the discipline of accounting. So, a principle should have relevance. A principle has relevance to the extent that it results in information that is meaningful and useful to those who need to know something about a certain organization. So, kailangan meron siyang relevance. So, dapat ito daw ay useful sa nangangailangan ng information or ng principle. A principle has objectivity to the extent that the resulting information is not influenced by personal bias or judgment of those who furnish it. Objectivity connotes reliability and trustworthiness. It also connotes verifiability, which means that it's some way of finding out whether the information is correct. So, free from bias. So, dapat ang principle ay ginawa hindi para sa personal objective, but it should benefit the many. A principle has feasibility to the extent that it can be implemented without undue complexity or cost. So, these are the 3 very important criteria in developing a principle in a certain discipline. It should have relevance, it should have objectivity and feasibility. So we have here the generally accepted accounting principles. We call it the GAAP. Objectivity principle, accounting records and statements are based on the most reliable data available so that they will be as accurate, as useful as possible. So yun ang objectivity principle. Historical cost. This principle states that acquired assets should be recorded at their actual cost and not at what management thinks that they are worth as at reporting date. So, dapat daw nire-record sa actual cost. Historical cost. Revenue recognition principle. Revenue is to be recognized in the accounting period when goods are delivered or services are rendered or performed. So, this is one principle. Ito din yung accrual principle. So, dapat daw ang revenue ay i-record or i-recognize when goods are delivered. So, hindi pinag-uusapan dito kung kailan tinanggap ang bayad. Or services are rendered. So, expense recognition principle. Expenses should be recognized in the accounting period in which goods and services are used to produce revenue and not when the entity pays for those goods and services. So, ganun din yung ating expense recognition principle. Expenses should be recorded or recognized when goods and services are used and not when it is being paid. Then, continue with our generally accepted accounting principles. There should be adequate disclosure. It requires that all relevant information that would affect the user's understanding and assessment of the accounting entity be disclosed in the financial statement. So, adequate disclosure aside from the basic financial statements, our income statement, balance sheet, statement of cash flow. So there should be an additional information. And this is what we call the adequate disclosure. Materiality. Financial reporting is only concerned with information that is significant enough to affect evaluations and decisions. Materiality depends on the size and nature of the item judged in the particular circumstances of its omission. In deciding whether an item or an aggregate of item is material, the nature and size of the item are evaluated together. And we have the consistency principle. The firm should use the same accounting method from period to period to achieve comparability over time within a single enterprise. However, changes are permitted if justifiable and disclosed in the financial statement. So, sa consistency principle, ang sinasabi ay dapat kung gumagamit tayo ng straight line method ngayong taon para sa depreciation ng ating property, plant, and equipment, we will use it from year to year. However, hindi rin naman sinasabi na bawal magpalit. Pwede as long as may proper disclosure.